Good morning, everybody. This is Gleason with MajorLeagueTrading.com coming at you with your morning trade plan. It is February 19th, 2019, and this is a reminder to follow your rules and trade your plan. Welcome, guys. Yesterday, markets were open on like a half day, really slow. Definitely a day you did not want to trade. As far as today, guys, the economic reports that we need to be aware of. Wednesday at 2 p.m. we're going to have FOMC minutes, so tomorrow be aware of that. Also, the oil inventory report is going to be pushed back till Thursday of this week. Before the bell at 4:30 a.m. you had Great Britain average earnings index. After the bell at 10 a.m. NAHB housing market index 11:30, the 3-month bill auction and 6-month bill auction, and 4:30 API weekly crude oil stock. The 7th round of trade negotiations with China begins today as well, so there could possibly be headlines that come out. If you see a really fast move in the market, it's most likely going to be a headline tied to that, but just to be aware of that, we cannot predict those headlines. The trend bias of the prior day, ES, NASDAQ, Dow, and Russell is all bullish. The overnight, we have neutral in all 4 markets. Shorter term, midterm, and longer term time frame in all 4 indexes are bullish. Earnings reports before the bell, the big one was Walmart. Actually, Walmart has reported really good earnings here this morning, surprisingly to most people. Their best holiday quarter in quite some time. Let's take a look at the previous day's summary for the S&P 500. The bell-to-bell high, back out here, the bell-to-bell high of the prior day, 27.75.75. The bell-to-bell low came in at 27.63 with the settlement at 27.77. Value area high 27.72 with the value area low coming in at 27.65.75 and the point of control at 27.70. European close was 27.68 quarter. The volume of the session was 1,452,000 contracts. Overnight high 27.82 half. Overnight low 27.66.75. Pivot points, support and resistance levels: R4A 28.02 half. R3 27.93 half. R2 27.84.75. R1 27.80.75. The pivot point for the day comes in at 27.72. S1 down at 27.68. S2 27.59 quarter, and then S3 27.55 quarter. S4A 27.51 half. All right, 10-day range analysis. The previous day, 12.5 or 12.75 point range. The entire session was 48.5. Overnight was 40. First hour is 8.25. So it was like the entire move by far was in the overnight session. We had 40-point move in the overnight session, and then during the regular trading hour session, we only had basically a 13-point move. So the move in the overnight was 3 times larger than the move on the intraday. That's pretty rare when we see that happen. So there's obviously a pretty big gap below. Index strength percentage change from the settlements for the trading days only. We have the strongest market as the Dow up 1.8%, followed up by the Russell up 1.68%. NASDAQ was the lagger, 0.6% return. Over the last 5 days, however, the Russell continues to lead up 4.1%, followed up by the Dow. So those are the 2 markets that have really been chugging along here. And I mean, guys, so far in 2019, we have outperformed the entire 2017 market in the Russell, and also we're outperforming the entire year of 2018. But obviously, coming out of a dip, we have a rip. So the Russell's just been beast mode in here. Let's take a look at these indexes. We've hit a couple of larger profit targets that I want to be aware of. I'm going to start off with gold though, because gold seems to be really breaking out here. I'm going to go to the daily chart, 1-year daily chart. We can even back out to like a 3-year weekly here. Gold has been in an incredible run, very bullish run since basically November. Our current upside weekly target that I have is 1351, and as of today, we have broken through the highs of the year. So gold is breaking through the highs of 2019 so far. And the target I have actually lines up with the previous resistance. Now, if gold can break out of 1360 this year, I think it's going to have an even better year. But we've been in this wedge for quite some time. New high of the year, like I said today. There is an extension in gold from the high of, what is that? That's October 26th, the high we traded once. Actually, same anchor new high, I'm sorry, never did trade. Instead, we traded the GC19, so GCJ19, which is the April contract, the full 50% retracement long for the year in gold targets 1342. Okay, so I see a possibility of gold running up to 1342.8 here over the next few days, now that we are through the previous high. And I'm going to leave up the GCJ19 contract. We are through the previous high of the year. Now, as far as the hourly sequence goes on the smaller time frame, let's just take a look at this coming out of those lows. Where basically gold took out lows last Thursday, 14th, Valentine's Day, and then has ripped out higher here and continues to make new highs. This last extension that held, and what I'll continue to watch, is the high from 1328 half to high, and we just completed or we came very close to completing at 61.8. I will continue to watch that same anchor new high, and as long as we stay above that 61.8, we're going to make our way up to 1342.8. So gold is in a very aggressive long trend here, and all of these pullbacks have been extremely shallow and quickly met with new highs. So that's why I'm really liking the way just gold has been trading, because it's a market that's continuously trending since Thursday so far. All right, let's take a look then. Go to the S&P 500. Talk about a couple of important targets we've hit up here. And with these targets being hit, it's possible that we could get a little bit of a deeper pullback. Now, the high of the Sunday night session is the old extension target. That extension began on Friday the 8th. So there's a possibility that we don't have any buyers until we get all the way back to that same anchor new high. So you can see we went completely sideways in obviously a very low volume session during the holiday President's Day, and we are holding, it's a little sloppy, but we are holding this 50% retracement short. We could not get bid above that 61.8, and then you can see early this morning we really started selling off, and it looks like there is continued selling pressure here. So I think it's possible that if we can trade below really these previous highs that we broke out of, so I'm just gonna show you where they are, but I'm not gonna leave it marked up. But if we can start getting below 2761 to 60 area, that we get a deeper pullback to at least 2747. So let me get rid of the extended session here and just show you guys. This is just a big old gap, okay? We gapped up to 2764, and the previous day's close was 2744. So there's a huge gap in price action here that if we start trading down into it, it's gonna be pretty easy to get to the bottom of that range. So I'm gonna be watching that 2747 and really actually favoring pullbacks, unless the only thing that would change our mind if we can break above the 61.8 from highs. But I'm going to continue to look at the 50% retracement shorts from that overnight high. And if we can't get above those 61.8s with any type of momentum, I'm going to be favoring the downside here. All right, moving on to the Russell. Let's talk about where the potential extension would exist from. I am going to be looking at, first, the Russell is the better performer here. Just to make that clear, Russell's the better performer. If we lose 1560, The first level of support is I have an extension that would be from Tuesday the 5th of February too high, and that 50% retracement is 1549.9, so call it 1550. So that's roughly a 14-point drop from where we are currently trading. So the Russell's extension currently is from the overnight high on Wednesday too high. It was aggressively front run on Friday, and it has traded its 38% retracement to the tick. But once again, I need to see the Russell get above that 61.8 to really confirm anything here. I think it's going to be a little more of a choppy to bearish day and a pretty tricky trade for any type of like super solid entry that you could swing. It's just these support levels need to trade below, so I'm not looking to be too aggressive with the indexes here for looking for bigger moves. Moving on to oil. Oil rolled over, okay, last week, and we have just broken a continuation extension sequence. What I would like to see is this same anchor new high trade and a pullback into 54.87. 54.87 and 54.30 are my support levels below on the continuous contract. Okay, and then I also want to be aware of, I'm going to type in CLJ19 and then just draw the same extension up, or be aware of it, what that level would be. That level would be 55.02. Okay, so I'm going to go here, 55.02. Just want to see if there's a reaction there. So I'm going to mark up 55.02 as well. But oil, you can see, is having a hard time getting through its highs here of Monday, and that's an old negative 61.8. So I will expect oil to have continued selling pressure here. Let me just look at a weekly chart. Okay, yeah, not that I'm a big fan of trend lines, but you can see there's kind of like a little bit of a top end of a trend line that seems oils have a hard time getting through. Moving on to the Nasdaq, this was the weakest market. So first thing I would expect is a retest of the halfway back long from Thursday's low to high, and that's 70.33.5. If we cannot hold that, I have no support till 69.83.75, and that would be a third test. So that test traded Thursday, traded Friday, we made a new high. Then the halfway back long from that swing low here, it's 70.33.5 is held. If we continue to stay above that 61.8, we'll work our way up to those profit targets. And if we lose that 61.8, I'll be looking for a move down to the bottom end of the range. But the Nasdaq probably I would stay away from unless we really started, if we started selling off, I'd favor the Nasdaq just because it has been a weaker market. There is an extension here in the Dow from the high of Thursday to high. You can see we've already had our first test though. If we lose this support level, we're coming halfway back from Friday before we see any support. So if we lose 25,787, I would anticipate no support till 25,613. And that's a pretty healthy drop. Okay, so I'm just gonna actually get rid of this 61.8 and we'll see if that ends up working out here. It's gonna draw a little box. If we start losing that support level and selling pressure is aggressive, I see a move down to 25,613. Okay. But yeah, with that being said here, guys, I'm gonna be watching. Mostly, I really wanted this level here in oil is really important to me. The indexes and the way they set up, I think they're going to be pretty choppy. So I'm not looking to aggressively trade the indexes here today. I'm more interested in this oil setup, a continuation of gold because we've cleared the high of the year and it's in a very aggressive, shallow pullback trend. So that's my trade plan, game plan going into the day. Thank you for watching the Major League Trading Morning Trade Plan. If you enjoyed this content, please give this video a thumbs up. Everybody have a fantastic day trading. I'll see all the Major League Trading members in the MLT Power Hour. And take care. I'll talk to you guys there.